Welcome to the Passive Income Podcast. I am your host, Dividend Dave. Please be sure to join the Passive Income Posse by clicking that subscribe button below. And on today's episode, I'm on Twitter at SmartNetWorth1. I'm going to throw it over to you, Nick, to give yourself an introduction.
Yes, sir. Thank you, Dave, for having me. It's a pleasure to be here. I'm definitely looking forward to our conversation. My name is Nick. I'm 35 years old. I'm originally from Yonkers, New York, and now I live in Connecticut. For a living, I'm a phys ed teacher with children at an elementary school in New York, and I'm also a dividend investor, and I manage 56 individual positions daily. So that's my deal. That's what I do.
Awesome. And I understand that you kind of gave your full story over on the Investing 9 to 5 podcast. So shout out to them. Nick's full story background. Let's just get into some of the different sectors and companies and what you like, dislike. First off the top, what is your, I guess, kind of favorite sector to invest in?
Okay, so first of all, just like you said, if you guys wanted to hear my full story, I go into pretty good detail on the 9 to 5 podcast with the Dividend Dog and Paul. So if you guys want to check that out, you get a bigger scope on as far as my story and how I came to this point. So let's get into a little bit, Dave. So just off the bat, I know that you're a big REIT guy. I've listened to a lot of your podcasts in the past. And REITs seem to be one of your specialties. So let's go a little bit into that first. And it's funny that we're talking about that because I know that you say all the Americans, they invest in realty income. That's my number one position in my dividend portfolio. It's the largest position. So I'm a big fan of REITs. I mean, we're talking realty income here, Dave. 11,000 properties leased. I mean, come on, what are we talking about here? So, that's my number one. I'm a big fan of REITs. I love their design. I love their structure. I love the idea that they're always considering the shareholder and they're required to give 90% of their income back to the shareholders. I think that's a wonderful base. And just to give you a base of what I got, I have realty income is my number one position. I also invest in Iron Mountain, which is also a fan favorite, especially on Twitter. Iron Mountain is one of my positions. DEA, which is a residential REIT, which is backed by the government, which is great. I really I like them because the idea of the government giving that security. And what else? Oh, and then I also have which is a new position. It's a company called Essential Properties, which I bought from the funds that I got from the Store Capital buyout. So I just took that capital and I placed it into Essential Properties. So and that's pretty much it. Those are my REITs. I look to increase my exposure to REITs. The only thing is that it's easier to invest in the REITs when they're tax efficient in tax efficient accounts. So my dividend portfolio is all in a taxable account. So I'm trying to figure out ways to try to incorporate more of a tax sheltered system. So those are my REITs.
Awesome. Yeah. Realty income, ticker symbol O, obviously is extremely popular in the DivTwit community. And among, like I said, every American guest that I've had on here, except I think maybe 2 or 3 that haven't held it. But other than that, it's like 99% of the Americans that have come on the Passive Income podcast have held realty income. And I understand why, right? Dividend raises, I think, every quarter, monthly payout. And that's another great thing about those REITs. It's like, sure, a 5% yield is 5%, whether it's paid monthly or quarterly, but it's just really nice to see that go into your account every 30 days or so.
Absolutely. And it's nice to see that, like you said, it's nice to see that monthly drip coming in. And, that exposure to a monthly payer is good. It's good psychologically as an investor to see that money coming in. And it gives you that security because they're such a well-established company. So they continue to grow their dividend. They continue to take care of the shareholders. And, all's good on that end. And as far as like what I'm looking at, like I said, I'm trying to increase my exposure to REITs this year. And the two that are very enticing to me is VC Properties, VICI. They're in the hospitality and gaming industry, and they're all over Las Vegas. So as we know, as we know, Dave, that Vegas is not going anywhere, man. It's only going to get more popular, and it's only going to get more expensive, and things are going to go up in value. So VC is one of the REITs that I'm looking for, and also NNN, triple net. I'm a big fan of that system as well, the triple net leases. I think it's a great way to get into real estate a little bit more on the passive side. And I like their portfolio. I like what they're leasing to. I mean, it's big names. It's the 7-Elevens, the Lifetime Fitnesses, the LA Fitnesses. So they're also on my radar for this year as well.
That Las Vegas one, is that the one that owns the big name hotels on the strip, like the Caesar's Palace
Yes,
and
sir.
MGM and
Yep.
Luxor and all of those? So yeah,
Yep.
I can see
MGM
how that's
Grand.
enticing, right?
Right. MGM Grand and
Yeah,
Caesars. And they're always packed, and there's always going to be a demand for that. And that's kind of a touchy subject too, Dave, because a lot of people, they kind of lump that, the gambling sector into like more of like the sin stocks and the tobacco and that kind of deal. And they're even throwing Pfizer in there now. So, like that kind of idea of, it's kind of a touchy subject for some, but I want to try to take advantage of the gaming and hospitality industry. So that's definitely one on my list for this year for sure, dude.
right. Yeah, I can see why. I've actually started calling them the ATM stocks, alcohol,
Yeah.
tobacco, and marijuana.
Okay. Yeah, that's a good way of looking at it. Put a little name to it. Keep it fresh in your mind.
And yeah, so if they do pay a dividend too, like that ATM, Dividend, John's talked about it before, having that ATM machine just sitting there in your living room, spitting out cash for you every month and every quarter.
Absolutely. What's better than that, man? What's a better thought than that, right?
Nothing better than companies paying me to not work for them.
Exactly, dude. And then giving you raises without having to perform. What's better than that?
Yeah, you don't have to talk to your boss and like explain why you deserve a raise. And
Yeah, man, that's one of the most amazing things about what we do with dividend investing, and I think about that all the time. And like I even talk to people at work about it, and I'm like, man, like I didn't have to write any emails, I didn't have to go talk to a boss, I didn't have to go, sit in on meetings and do the whole workplace deal and all that kind of stuff, and the politics that go around the workplace and all that stuff, and and you get paid and it's income, and it's once I found out about this, man, it was a game changer for me. It was just like, this is real, this is actually something that people do, and this is available to everybody, so let's do it.
so that's a great segue. How did you find out about it?
You know what it was, Dave? I was at a point, and like I said, my story is pretty involved, and there was some tragedy that happened in my family, and I was kind of in a point, in a place that it was kind of make or break. It was, you want to make something of yourself at this point, or do you not? So I kind of just like buckled down, and I doubled down on myself, and I was like, all right, what can I do to learn about money, and what can I do to find something that can grow my wealth, um, have me learn about something that can better my life, and also have something that can fit into my lifestyle.
Right.
Because like I said, I'm a teacher, I'm a 9 to 5 teacher, so I'm with the kids all day long. So I'm it's a constant flow of classes all day long. So I already knew like something like day trading wouldn't happen, because I can't be glued to the computer. I'm working all day, so I had to figure out something that would allow me to grow my wealth, but also fit nicely into my lifestyle, that I wasn't losing what I was doing with my career as well. And then it was dividend investing. It was the best form of passive income, but also being able to kind of be a manager and decide how much time that you want to put into it.
Yeah, and honestly, you can put as little or as much time into it as you want. You can put a lot of time into researching hundreds of different companies or even thousands of different companies, spend hours upon hours, or you can just kind of look at other people's successful
Right.
portfolios and then pick out say 10 or 20 and look at those and research those companies and say, okay, yeah, I like that one. Oh, I don't like this one. Oh, this one fits for me, this one doesn't. And pick out 15, 20, 25, whatever your number is. And it really doesn't take a lot after that, right?
Right, exactly. And that's pretty much how I built out my portfolio. The first thing I did was I went around my house, and I always tell the story. I went around my house and I tried to identify, all right, what products do I use on a daily basis? And I identified those products, and then I looked in the back and I wanted to see who owned them. And then I'm looking at Johnson and Johnson, Unilever, Procter and Gamble, things of those natures. And I'm like, okay, so then I'm deep diving into the companies and I'm figuring out what the deal is. And then that's pretty much how I got my base. And then I understood like the difference between REITs and blue chips and what makes up the entire dividend sector. And that's how I learned, and that's how I started. And just like you said, it doesn't take a lot. And and there's so many approaches, Dave. You know that there's so many different dividend investors out
Yeah.
there. There's people that invest in dividend ETFs like SEHD, and that's the only holding that they have. And that's more of a hands-off approach, but that's great too. There's so many different ways to invest, and it doesn't have to be just what I do. I manage individual stocks. I also have ETFs and mutual funds, but the basis of my portfolio is individual stocks. But I think there's a misconception that it's only that, or it's only ETFs, or it's only index funds, and it's so false, and it drives me a little crazy too, because there's so many ways to do it, man. And it's we're all, at the end of the day, it's like ice cream, right? Like I like vanilla, you like strawberry, somebody else likes butter pecan, but at the end of the day, we're all eating ice cream, and we all like ice cream. So that's kind of the way I look at investing. Like I might like individual stocks, I might like ETFs and in index funds a little bit less, but at the end of the day, we're all investing and we're all trying to build our wealth.
Yeah, and that's definitely something I've learned here on the Passive Income Podcast, talking to close to 50 different guests now. So many people with so many different ideas and strategies and opinions. And, there's, I'm sure there's a lot of wrong ways to do it, but there's also so many right ways to do it, right?
Sure. And I think that's, like I said, I think that's something that's kind of chastised in a way. Like I think like some people are just under the impression that if you're buying individual stocks, you're not doing it right, or if you're buying only index funds, you're not doing it right. And it's kind of it kind of warps the mind of a person that's trying to get into this, because
And
it should be.
there's no rule saying you can't have both individual stocks and ETFs, right?
Dude, I do it. So
Yeah,
it's
me too.
yeah, exactly. So it's something that I wish was a little bit more open, and I wish that it was more like like out there, like you can go in different paths, but we're gonna meet at the end.
Yeah, that's a great way of putting it. Different paths, but you still get to the same or similar finish line, right?
That's it. I always say that. I always tell people that are starting. I always say, hey, listen, there's room for everyone at the finish line. I'll see you there.
Nice.
Yes, sir.
Nice. Yeah. REITs are awesome. I do love them. I hold several. I love them because all of mine are monthly payers as well. And
Oh, that's
so
sweet.
again, just
Awesome.
seeing that go into your account every month, right on schedule, and then like you said, you can just drip it right back in, and every month you're giving yourself a little bit of a raise, adding to that snowball brick by
Right.
brick and watching that snowball grow, right?
Exactly. And I think it's also, like we said before, I truly believe, Dave, that it's psychological. Those small little wins of having like UCO coming in every 15th of the month, those small little wins should be celebrated, and
Yeah.
it keeps you motivated, it keeps you going, and things just get bigger and bigger and bigger. And more than anybody that you got to have those wins for your mind. You got to be able to keep going, because this game is too long, you
Yeah.
know? So you got to keep going, and a monthly payer, especially a REIT, is such a wonderful thing for the psyche, and it just keeps you going.
Definitely a marathon, not a sprint.
For sure, dude, for sure. You know that.
With that said, I don't mind quarterly dividends either. Every
Oh,
3 months.
oh man, you know those quarterlies are the foundation. Those are the bloodline, in my opinion. So let's get into those a little bit.
Sure. Yeah. Yeah. So obviously there's a lot of different sectors that are more heavily involved into the quarterlies. The financial sector, the telecoms,
Sure.
uh, technology, anything in those sectors that pique your interest?
Oh man, Dave. I mean, I'm in all of them. I'm scattered around all 11 sectors of the S&P 500. Um, if you want, we can kind of break down like some of my bigger areas. If you want to
Sure.
talk about that a little bit. All right, let me just bring it up here. All right. So, all right. So about 25% of my portfolio is in consumer staples.
That's going back to walking around your house and finding
Exactly.
Procter and Gamble, Johnson and Johnson,
Exactly.
Unilever, etc.
Exactly. And what I did was, Dave, I was at a point where I was when CV happened, I was still at a point where I was still green. I just started investing in 2018, so I was very green still. I was wet behind the ears, trying to make a name for myself, trying to get out there and build my passive income. So what I did was during the mist of the entire thing, we're talking March 2020, March, April, May, that summer. What I did was I decided that I was going to double down on my core top 10 stocks. And the
Nice.
core at the time was all quality. I didn't want to mess because it was my first downturn. It was my first real big downturn. I mean, I remember waking up, Dave. I'm at my girlfriend's house, and I'm waking up in the morning, and my account is down $12,000-15,000 in a day. So at that point,
Yeah.
yeah, it was tough, man. And like I said, it was my first real big downturn. So at that point, I decided, all right, I think the best thing at this point is to target quality, and that's what I did. And I just targeted these stocks that I'm going to tell you about, and that's why the positions became so much bigger because it dropped like a rock back then, and I just started banging them down, and I was able to get a lot of shares during that time, and they've just went up astronomically in value since then. So I'm just going to rattle off, if that's okay. Do you want me to just rattle off all the staples that I have?
Yeah, go for it.
Okay, cool. So we got Pepsi, ticker symbol PEP. We got Coca-Cola, ticker symbol KO. We have, and this is by value as well. We have Altria, MO. We have Philip Morris, PM. Kimberly Clark, KMB. We have Universal Corp, UVV, which is a tobacco company. We have General Mills, GIC. We have Procter and Gamble, PG. We have Spartan Nash, which is a food distributor to local supermarkets in New York and all around the country. And then we have Campbell Soup, which was found in my pantry when I first started. So that's CPB. We got Unilever, which is UL, one of my first ones that I started with, and Clorox, CLX. So those are my staples.
Yeah, and you know that's a great part of your story too that I'm sure you go into deeper over on the Investing 9 to 5 podcast. But getting in that 2018 time, and like you said, wet behind the ears, still in 2020, and but not panicking, not panic selling, and losing that 12 or 15 grand when you're down, but saying, "Hey, this is a great opportunity to buy a whole bunch more at a ridiculous discount."
Right, right. That's exactly how it went, and it was scary. Like I'm sure you remember those times. It was turbulent, man. It was people were selling, and you go on social media and you have these gurus telling you to sell, and people are panicking, and there's people that still haven't got back into their portfolio from those times. So it was definitely a time, and it was a good experience for me. Like I said, because I was super green, and I still am. I'm only 5 years in. I'm still learning, and I'm still at that point where I feel like I'm a student. But yeah, it was tough, man, and I was extremely grateful to have influence from people that I feel were very knowledgeable, like a gentleman called PPC Ian on YouTube and Twitter. He's my guy, and he was one that was always in my ear. I was watching his videos at the time, and he was reiterating at the time to buy quality, and it was in my ear, and that's what I was doing. So I was grateful, and I still am at that point that I was able to take advantage of those opportunities. And where I am now is because I doubled down during that time. So definitely a game changer that time for me.
Yeah, that's great, and that's a great point. Like I'm old enough to remember living through several recessions, like and the 1987 market crash and the late 90s or early 2000s tech bubble, and then obviously the 2008 housing crisis, and then yeah, the March 2020 whatever you want to call that COVID crash,
Right.
and
Whatever you want to call
and
that.
what I've learned from all of those is that the market recovers, right?
Right, right. And I think that's a lesson in itself because this, like I said, that was my first downturn. And I'm saying to myself, I've heard from many different experienced investors that things always come back. And I'm a firm believer, Dave. I'm a firm believer that you follow people that have done it before you and that have done it well. So, I
Yeah.
was looking for that guidance. And that's what I heard. That was always the narrative. Things come back. If you look at you pull it back from the 1980, the S&P 500 has gone up and to the right. So, I felt that was my comfort, and I felt like history is on my side. We've never seen something like this before in our world, but we're not going to zero. You can't tell me that the stock market is going to zero no matter what. We're gonna
Right.
the sun comes up tomorrow, and it's gonna be a better day.
Cool. Before we get into the next segment, I am going to give a shout out to Buy Investing. Sure, that everybody knows you can use the code word Posse. Link will be in the description below. I do want to get into the next sector of financials. I'm sure you know just from being on Twitter, the Canadian banks have ridiculously consistent longevity for paying their dividends. And I'm just kind of wondering what you think of Canadian banks and or American banks. Obviously, you've got your JP Morgans and your Bank of Americas and Wells Fargo down south. So yeah, let's jump into that sector.
Sure, sure. And it's funny you say that because financials is one of the sectors that I want to try to increase this year as well. I'm a little light in the financials. So it's funny you're talking about Canadian banks because I look up a lot of Canadian banks. And I am super, super impressed, Dave, that Canadian banks, they hold so much cash. They have so much cash and they make so much money, dude. They're like cash cows. And I've been diving into it, and I've seen, and I have a nice little list of some Canadian banks that I want to look more into, and waiting for a nice setup. But my banks, my number one position in the financial sector is Bank of Montreal. And that the history there is just phenomenal. They stack cash. If you look at their balance sheet, they just stack cash and cash and cash. And I love them. So that's one that I'm in. I'm in T. Rowe Price, which is a financial sector stock. Looking to increase my exposure to them as well. And then the last one that I have is Bank of Hawaii, because I wanted that exposure to that part of the United States, and I thought that was the way to do it. So again, same thing, solid history. Payouts are solid, and their financials are very well. So those are the few that I have. But like I said, I'm trying to increase my exposure to the financials this year, and I think I'm going to Canada, dude.
Come on up. Canada is a very welcoming country. So
Oh, I know, man. I know.
you're definitely invited.
Sweet. Make some room for me, man. Please don't buy all the shares. Save from me.
No, I definitely won't be buying them all. But yeah, it's same. I'm trying to increase my positions in the Canadian banks as well. So again, going back to those quarterly dividends, it's just nice to see them come in as well. You get that. I almost call it the bonus months, right? Where it's like, oh, I get because I barely even track those ones. Well, I do. I mean, obviously, I do track them in my Excel spreadsheet, but
Sure.
like every month, I kind of know what REITs are coming in, and then all of a sudden, be like, oh, I got this one from, say, Bank of Nova Scotia, or this one from Bell Canada, or whatever other quarterly one that might happen to come in that month, and you're just like, oh, that's nice.
Right. There you go. Yeah, Bank of Nova Scotia is one that's on my list as well. I've been reading on them, and same thing, impressive stuff. And it's going back to it. It's amazing how much cash these companies have. It's unbelievable. And I know because I've heard you talk about it before, and that's what enticed me to go look. And I'm like, man, these companies are really holding some cash. So I'm diving into it, and I'm probably going to be investing some into the Canadian banks soon.
Yeah, the number one thing that impresses me most about the Canadian banks is the longevity and the consistency of the dividend payments,
Sure.
where a couple of them are coming up on a 200-year anniversary, and all the big five are over 150 years of paying a dividend. Now, obviously, they haven't had a dividend growth or increase every single one of those 150 or 200 years, but just the fact that they've paid them consistently for close to 200 years now, to me, that's extremely impressive.
That's insane. I mean, come on, they've been in the game for 200 years. That's incredible. That gives you some kind of confidence that I don't think they're going anywhere.
Yeah, right. Like you just look at the history and go, okay, yeah, gives me a lot of confidence, right?
Yeah, man, exactly. And there's only so much that we can go off of, right? Like we're investors, and everybody is looking at the same thing. So that's definitely something that I look at, and I would be extremely confident in my investments looking at 150, 200 years of in the game, you know?
Yeah. I also mentioned Bell Canada in there, another quarterly dividend payer of mine. Bell Canada is a telecom and well now media company as well as the telecommunications has kind of merged into television and streaming services and whatnot. Anything in the telecommunications sector? Obviously, in the states, you have your AT and T's and Verizon's and T-Mobile.
Yep. When I first started, I was investing a lot into AT&T. I think my position is pretty large. It's over 10 grand. So, I stopped after a while. So I just let the dividend drip. And I also hold a position in Verizon. So, and Verizon is a beat up stock. And there's a lot of negative news and a lot of negative feels around Verizon. They have their problems just like everybody else. But I feel like, going into the future, I feel that both companies will excel and be better. And those are,
That's my dog. That's my dog
hey,
making
man,
sure
hey.
everyone is still awake. Hey, buddy, come on.
I guess he's not a big fan of
Relax.
Verizon. I guess he wasn't feeling
Hey.
that Verizon comment.
No, not at all.
So yeah, that's my exposure
Hey,
there to
stop.
telecoms.
Interesting. So, did you go through the dividend cut with AT&T?
I did, and I stomached it. I kept my shares. I still have the Warner Brothers shares as well. So that was on the spinoff that they had. But the dividend cut, yep, I went through it. I adjusted. I didn't sell any shares. Many people sold out of their
Hey,
entire position
stop.
at the time, but I did not. I held on, and I still have all my shares. So I don't plan on selling anything. And then, Dave, it's funny you bring that up because I was just talking to somebody on Twitter about that the other day. Cuts are something, in my opinion, that it's part of the game. It's part of being a dividend investor. And the way that I look at it is that when a cut happens, I feel almost like it's a way to give credit to the company for being responsible because they're identifying that they have problems. They're cutting the dividend. They're going to improve operations, and then they're likely going to bring the dividend back. So, I think that
Right.
a cut is very miscued in our industry. What we do, dude, because I just look at Ford, right? Just as an example, and I use this all the time to tell people, Ford dropped to $5 a share, and what they did was they cut the dividend, if you remember, and they used
Yeah.
the funds and they used the capital to improve operations. And then the stock shot up back up to $25. And then what did they do? They reinstated the dividend. So I think that cuts in dividend investing is part of the game. And that's when the management comes in, right? That's when you are an asset manager at that point and you decide what you want to do with that cut. And it's not just, oh, let me get out of the stock and let me run away as far as possible because they're not paying a dividend anymore. I'm always willing to sit out a cut if they're purposely putting the money back into the business for operation improvement. So, I just wanted to throw that out there because you mentioned the cut. But yes, I did go through the AT&T cut, and I kept all my shares.
Yeah, a couple of great points. Like I've had other guests on who say, for them, a dividend cut is a huge red flag, and they just say, "Okay, I'm done with that company." And if I'm taking a loss, I take the loss and look for companies with the dividend growth. And I think I'm a little bit more on your side, where it is part of the game. And at the end of the day, I just hope that the dividend raises outgain the dividend cuts over the course of time, which they probably should. And
Right.
like you said, it can be a waiting game for them to bring the dividend back.
Right, and that's always part of it as well. I mean, it also depends on what the company is and what sector they're in, and it's a total different game when you have like a mortgage REIT cut their dividend as opposed to an AT&T or a Verizon or something like that. So it's all about identifying what your investment is, and then it all goes back to Dave is, in my opinion, when you get into a stock and into a company, you have to establish what you want to do with that company. Do you have an exit plan? Do you have an idea of what you would do or how you would move things around if they cut the dividend? Do you understand the risk involved of potentially cutting that dividend? and things of those natures. So I always tell newer investors that before you click that buy button to establish a position in a stock, know exactly what you're getting into and how you would maneuver, because a lot of times people don't understand that you're an asset manager. When you are an investor, you're an asset manager, especially somebody like me that manages 56 individual stocks. You got to be okay with managing. So when something happens, you can't be looking left and right. You got to understand you're the manager and you got to decide what you want to do. And establishing that before you get into the position, that's the way to do it.
Yeah. And some of them you're like, I just want to keep stacking and hold forever and just
Exactly.
let that dividend keep coming forever. I think that's a great segue into the next sector that I want to talk about being energy and utilities and
Sure.
that because I literally just went through a dividend cut as so many others did early in January with AQN Algonquin Power,
Right.
and I'm sure you're aware that was a rather big dividend cut, like
Yes.
40%.
Yes.
um, but I'm still holding. Again, my position in that company is fairly small, so I figure, you know what, I'm just going to hold and see what happens. And similar to what you were saying, or exactly what you were saying, just see where it goes from here. Like let the management restructure to get to that point where they can maybe start to raise the dividend again in whatever it is, 2, 3, 5, 7 years down the road.
Yeah, sure, absolutely, and that's the way to look at it. That's absolutely how you do it. And yeah, I was aware of that dividend cut, and that was pretty beefy, man. And I know a
Yeah.
few people in our space on Twitter, the dividend space. I know that they were feeling that. Saw some people that had pretty large positions were feeling that. So same thing like you said, just that perspective and that outlook of what you consider for the company and what you consider for them long term. That gives you that comfort. And I think what you're doing, holding your shares and kind of assessing, see what they're going. I think that's probably the approach that I would do as well.
Right. So, like I said, just kind of wanted to segue into energy, utilities, renewables,
Sure.
anything in that sector that you're invested in or piques your interest.
Yeah, I'm into oil. I'm big into oil. I believe in oil. I'm a big oil believer. I feel like even with all the EV movement, and we're so technologically dependent in our society that I think I still think that oils is such a foundation in our world.
Yeah, it's
Canada, the
not going away
U.S.
anytime soon.
Yeah, man, exactly. I mean, I think it's going to be a very long time before the entire world is all EV. I mean, you still have boats in the water, you still have airplanes in the sky, you still have trains, you still have to, heat your house. So things of those natures just gives me that confidence that oil is probably not going to be extinct, at least not in my lifetime. So my
Right.
exposure to the oil sector is BP, Chevron, Shell, EPD, and ETRN, which is a midstream company. So I'm heavy into oil. I got about 35 grand in oil stocks, and same deal when they dropped in I believe it was December 2020. They dropped pretty good, and I went in pretty good. So I'm up pretty good in my oil exposure. And same thing, I'm just holding. I'm collecting dividend. I'm never selling any of those shares. I've waited it out too already, dude. I mean, during CV, all those positions. You remember oil? Oil it plummeted like a rock, dude. So I was down thousands and
Yeah.
thousands of dollars, and I've waited it out, and I'm back green in all of them. So they're not going anywhere in my portfolio. I'm holding those until the end, dude. So oil is a staple in my portfolio, and I'm a huge believer in the oil sector.
So you've definitely learned the importance of patience in and long-term investing.
Absolutely, sure. And then it was because when I started and what I experienced with CV.
And I just wanted to add to that too about oil. Like obviously you mentioned all the transportation of planes in the air, ships in the water, trucks on the road, trains on the railroads, but all the other petroleum-based products that we rely on. There's
Absolutely.
petroleum goes into so many other products that it's going to be a long, long generations before, if ever, that we're completely that the human race is no longer has any more oil. So I
Exactly.
agree with you on the oil sector 100%.
Yeah, man, I definitely believe that's true. And think about it, Dave. Like they're trying to push to have all the cars in on the road to be EV, right? But not everybody can afford an EV car. So there's always going to be a big demographic of people that have to have used cars. And that's what they can afford. That's their means. So it's going to be a
Yeah,
long time until every used car in the, in the industry is EV. So, just like you said,
right.
oil's not going anywhere.
Jumping in a little bit to the EV sector too. Um, the two big plays I look at in that sector are lithium and copper. And the amount of copper that's needed to build an electric car, the amount of lithium needed for all those lithium batteries, whether it's a dividend paying stock or not. If you look at some of the growth stocks in those industries, I think you might have, again, not financial advice, obviously,
No, nope, nope.
but if you look at some of those stocks, you've probably got some. I know there's some positions out there that are very appealing.
Yep, yep. I think so too. I'm not gonna lie. I'm not very, very familiar with that sector because I'm always so busy, just managing my portfolio. So I don't really get a chance to really, really dive into that sector. But I've learned a little bit about. I'll tell you about an EV company that I've learned a little bit about, and it's been on my radar. And it's because my guy Dividend Dog Teddy, my man,
Neo,
Neo, Dave, Neo. He's always pumping it, and he's always in my ear about it. So, I dove into a little bit, and I like what they're doing. So, if I had to put one out there, it would definitely be Neo. And shout out my man Dividend Dog. That's my guy.
nice. Yeah, he was on the passive income podcast a few months ago, and he was talking about Neo back then. So as soon as you mentioned that, I knew exactly what you were going to say.
Okay, okay, yeah, yeah. I'm not surprised.
And as we're talking about EVs, obviously, that falls into the technology sector somewhat, quite a bit. So, in the US, you have some obviously great technology stocks, your Apples and Microsofts. Do you have any plays in the tech sector?
Um, You know what it is, Dave? In my Roth IRA and in my retirement funds, I have my mutual funds, and those are all my exposures to the QQQs and the the spies and things like that. So my exposure to tech is through those. But I also have in my individual dividend portfolio, I have IBM, Intel, and Cisco. So those are my three that are my exposure as far as individual stocks in tech. So but like I said, in my retirement account is more so my exposure to the Apples and the Amazons and the
Right.
Googles and that situation.
Okay, cool. We've went through quite a few of the different sectors: REITs, energy, banks, telecoms, consumer staples, a little bit of technology. What else is in your in those 56 individual stocks that we haven't really covered yet?
Okay.
It might be a lower percentage or something.
What I'd like to talk about a little bit is I'd like to talk a little bit about the healthcare sector.
Sure.
Because that's something that I have heavy exposure to, and that's also the sector right now that is kind of out of favor. So all of my um, healthcare stocks that I have, those are the ones that I've been buying recently from because, as you know, sectors go in and out of favor. So there's
Yep.
11 sectors in the S&P 500. Not every sector is going to be in favor at the same time. So they're going to rotate. So I look for that. That's one of my buying strategies. And right now, healthcare is out of favor. So I'm just going to give you a little bit of an idea of what I have here and what I've been buying. So I'm sure J&J, Johnson and Johnson, right?
Yep.
That's a darling. That's definitely a dividend Twitter darling as well. So that's actually my second largest position in my dividend portfolio, about $14,000. ABBV, which is that's the company that has Humira for Crohn's disease. Very, very popular product. Merck, MRK, Gilead Sciences, GILD, Pfizer, PFE, Viatris, VTRS, and Medtronics, MDT. So those are my healthcare exposure. My healthcare exposure, and like I said, I've been buying recently on this downturn. I've been buying J&J a lot. I've been buying AbbVie. I've been really banging down Pfizer, which I get ridiculed a lot on Twitter about that Pfizer, but yeah. So that's a sector that I feel is an anchor in my portfolio, And especially since what happened to our society, right? And healthcare has just been a staple in everyone's life, and everybody needs it. And I feel like that's a sector that is like it's like a rock, like it's
Yeah.
always going to be there, and it's always going to be established, and there's always going to be a demand for healthcare. So I think that that sector is an extremely important part of my portfolio.
Since you mentioned Johnson and Johnson and the healthcare sector, and when we were talking about consumer staples, I do have to ask you what your thoughts are on their strategy of splitting into two separate companies, two separate entities. I'm not exactly 100% sure what they're doing there, but if you know any more than I do, please enlighten me.
Well, they're trying to expand. They're trying to get more services and products out there, which is the design. For me, I'm going to be holding the shares of the new spinoff as well. Same thing that I did with other spinoffs, and it tend to work out okay. So I like the move. I think that anything to try to improve and to try to get better and to try to keep up with the technologically demands of our society. I think it's just their effort. So I think it's good. I think that anytime a company like that makes moves, I think it's definitely something to consider as far as a positive. And
Right.
it's and Dave, I'm sure that you've got this feel already from me that I'm a big optimist, man. Like I'm so positive all the time. I rarely see the negative. My family all the time, like my girlfriend tells me all the time, like, why do you never say anything negative? Like, do you never look at the negative part of things? And I'm like, no, like I
Why?
don't. Yeah,
Negativity
like
does nothing for you.
exactly. If you're negative, you're leaving the positive on the table. So it's like I'm not doing that. So maybe some people look at it as a negative that J&J is kind of losing their feathers, but I look at it as a positive. You can only go up, in my opinion.
Yeah, you're like me. I like to consider myself a glass three quarters full type of person.
Me too, man. All day.
Awesome. I'm gonna bring up your link tree here, and we'll just talk about that a little bit. Some of the different
Oh,
things you
awesome.
have going on.
Sweet.
You just want to go through that top to bottom and talk it through.
Yeah, sure. So if you look at the first product, that's my research guide. That's my free offering, and if you go inside there, you'll see how exactly I analyze a stock and what I look for when I'm considering a new investment for a dividend stock. So it'll go through all those metrics and it'll go through everything that I consider. There's a checklist also there, which is very helpful, and I've gotten some great feedback from that. So I think that's a very good tool and resource for anyone that's looking for that information. And the next one is my ebook that I just put out around Christmas time. And this is a baseline beginner's guide to what we do with dividend investing. And this is everything. What I did was I created this because I was getting so many messages from people saying, "How do I start? Where do I look? How do I learn?" And that's what I was when I first started. I was so eager to learn, and I didn't really know where to go. So I wish that I had a guide like this that gave me all of the base in one product and just solidified that base of knowledge for me. And I was thinking like, man, if I could create something like this for people, I think that would be a great resource for them. And that's what I did. I kind of put everything together that I felt that was important to give you that idea of putting your feet on the ground and running. And that's what I did. So that guide is a great resource for beginners. I'm not sure how much value there would be for somebody that's seasoned like yourself, but definitely for beginners, that is an excellent resource. And yeah. And then the next one is one of my affiliates that I'm associated with, and it's a great guide to grow your Twitter audience. And it's funny, I sort of created a audience rather quickly on Twitter, and all the things that I did are in that guide. And it was almost like I didn't even know that I was doing them until I saw a guide like this, and I was like, man, I did that, I did that, I did that. This is a great guide. This is exactly what I did. So it was a great connection. The opportunity came up to be an affiliate for this product, and I jumped at it because it was so similar to what I did.
Nice.
And then the next one is another affiliate. This is how I track my dividends, And this is a product that was created by another influencer. His name is JJ Buckner, and he's another one of my guys. He's a big supporter of me and what I do, and likewise to him. And we support each other. And again, the opportunity came up to have this be something that I could push out to my audience, and that's how I track my dividends. I use it personally, and I think also it is a great program to track your dividends. It's an excellent platform if you want to stay on top of your day-to-day activity in your dividend portfolio. Next one is my YouTube, which we're in my YouTube studio right now, which has not gotten off the ground yet, but that is soon to come. And then the two is Twitter and Instagram. I'm trying to build up my Instagram a little bit. I haven't had the best luck or the fastest growth like Twitter, but I'm trying my best to get some people over there too and support our initiative as well. So that's it, man.
Cool. Yeah. So I did notice that. Yeah, you're already over 100 subscribers on YouTube with uh, zero content, no videos out yet. So
Yeah.
when are you going to start putting videos out on YouTube?
Definitely sooner than later, and I really feel bad about that because this was well overdue, and this was way overdue. And I've been pushing that, and I've been telling everyone that I'm making these videos, and I need to, but it's just there's been a few things, like just as far as the logistics and the soundproofing of the room that I'm in, and some setbacks, but it's definitely soon to come. So I apologize for the wait if anybody's listening to this that follows you and me. But it is definitely in the pipeline for the next, I'd say, next few weeks or month tops.
Cool. And I will link that Linktree in the description below.
Thank you, Dave. I appreciate that.
If you want to find any of Nick's socials, go subscribe to that YouTube channel so you can watch the videos when they come out. Follow him on Twitter. You're a great follow on Twitter. I love a lot of your tweets. Great.
I appreciate that. Thank you.
Yeah.
You as well.
I very rarely go on Instagram myself. It's just not really one of my favorite. I just prefer spending more time on Twitter than Instagram. That's just my personal opinion. And yeah, definitely. Like I said, that the link will be in the description below if you want to check out any of those guides or ebooks or other links. So feel free to head over and check out some of Nick's content.
And thank you, Dave. Thank you for saying that. I put a lot of time and effort into my tweets, and I try to give as much value as possible. I'm value driven to my people, so I hope they identify that. And then you as well. I'm a big fan of your work and what you do, and I've been following you since I started on Twitter, and I always valued what you say and your approach to the game that we play. And you were definitely a person that I look for as far as content on Twitter.
Nice. Thank you. I appreciate that as well. Yeah, like I said, my big thing is just exactly what we're doing here, talking to people, just having conversations, learning from everybody, giving the Dividend Twitter community a platform here on the Passive Income Podcast, giving everybody a voice to come on here and share their ideas, strategies, life stories, whatever, wherever the conversation takes us, right?
Sure. And you're doing great, man. You're really doing a nice thing here. And our community is great. You know that. The Dividend community on Twitter is fantastic. I mean, it's funny how like Twitter is kind of broken up into like a fin twit, like it's like financial Twitter, and then that's like the big scope. And then we got these little pockets. Like you got the dividend pocket, then you got the real estate pocket, you got the cover call pocket, you got the options pocket. So it's like it's so cool that our pocket, the dividend pocket, it's a great group of people, and it's just like everybody supports everyone, and every day that you interact with people, somebody is giving you a tip or telling you to do this or maybe you should try that, and it's a phenomenal community to be in. I'm so happy that we could connect and we can share the space together.
Yeah, and I agree with that. Great community and just like supporting everybody's wins. When somebody posts I made $1 in a dividend, everybody's that's great. Awesome. If somebody posts I made $10, hey, that's great. That's even better. If somebody posts I made 100, 1,000, whatever the number is, it doesn't really matter whether it's like I said, 50 cents a dollar, $100, $1,000. Everybody is so supportive of everybody and supporting those wins.
Exactly.
Like you said earlier, when we were talking about the monthly reads, like just take those wins and appreciate those wins, right?
Right. Right, man, exactly, and it's such a fulfilling thing. And shout out to you, shout out to the Passive Income Posse. You guys are great. This has been a great experience for me. Oh, by the way, shout out my buddy, Bert and Lanny from the Dividend Diplomats. Those are my guys too, so I had to give them a little shout out.
Nice.
Wear their sweatshirt on the podcast. Those are guys that has supported me from the beginning as well. So shout out to those guys. And same thing like you, Dave. I really appreciate you bringing me on and letting me share a little bit of my insight. I'm no expert, but I'm doing it every day, and I'm about it. So I like to think that I'm a pretty decent person to learn from.
So on that note about the Dividend Diplomats, I've been trying to nail down a date in March to have them as guests here on the Passive Income Podcast.
Oh, guys, say these guys, Dividend Diplomats, get it with Dave, man. Get with the Passive Income Posse. These guys are good guys. Get on here and tell your story, man.
Yeah, so be sure to subscribe with notifications on so you don't miss that one, because I do have some, as always, more incredible guests coming up. And I guess before we sign off, is there anything else you would like to say or touch on or mention?
Just anybody that has followed me on Twitter. I appreciate your support. You guys have been great. You guys have elevated me to the levels that I never would have imagined that I'd be at. I mean, I'm almost at 20,000 followers, and I never in a million years would have thought that anybody would care about anything that I'm doing. I invested in silence for 5 years because I really didn't think that anybody cared. I thought it was boring stuff, and it would not resonate with anybody. So I am extremely, extremely grateful that you guys have supported me, and thank you so much. And there's absolutely more to come.
Awesome. And again, I thank you so much for your time today, spending time with me. Just, like I said, I try so hard to make sure these don't feel like an interview. It's just a conversation between two people, easygoing, laid back, just two people talking. And yeah, so I really appreciate you coming on the Passive Income Podcast and spending your valuable time with me and with the Passive Income Posse.
Thanks, man. It's been great, and I really appreciate you bringing me on. Thanks so much, Dave.
Cool. And last shout out, buyinvestingshirts.com. Link in the description. Use code word posse for 5% off. And subscribe. Awesome.